Hey everyone, Mortgage Nerd here. So let's go over what's been going on with mortgage rates over the last month or so and how inflation is affecting them. Remember, inflation is what's been driving mortgage rates higher. Every time the Fed raises the short-term rate, which is the Fed fund rate, it's actually bringing rates down. But they haven't done that in 2 months. So let's take a look. Today was the CPI data. The inflation data came out higher than expected. Therefore, rates started tanking. That's over here, mortgage bonds tanking, which means rates went up. Last time we were at this level was the end of June, right before the Fed started really aggressively raising rates. Inflation was looking bad. Since then, I was like, hey, rates are at their lowest point since June. This was early August right here. But then since early August, we've been on this downward trend. So you look at this trend line right here, downward trend there. After we had this upward trend, then we had this sideways motion trying to figure out where are we gonna go, and things started going down. Remember, down here is up, so rates started going up. This is the 10-year Treasury, and as the 10-year Treasury goes up, interest rates are going up. It's opposite what we just saw with the mortgage bonds. So you can see here, look at this trend line, just straight up. Today's news on CPI has us to the highest point, again, just like it was here in late June, and then the Fed started really aggressively raising rates, which is fighting inflation, which brought rates down. So now we have a Fed meeting in a week. On the 21st is when they should come out and start talking about what they decided in their meeting, and we'll very likely have them raising rates again. These are the short-term rates, it's not the mortgage rates. So this will help the mortgage rates come down because they're fighting inflation. Since they haven't done this in 2 months, it's almost like the bond market is like, hey, inflation is going to keep going, and it has. So inflation is driving everything when it comes to fixed rate mortgages going up. Until inflation slows, we're not going to see them really come down. As long as the Fed keeps fighting it, at least for a little while, we'll be in that up and down motion. So we're hitting 6% or so now again. We were in high 4s a little while back. Maybe we'll get back down there again. I predicted we'd be in the 4s in September. Didn't work out. Maybe by the end of the year. Mortgage Nerd out.